keep you updated on the capital and financial markets. Here is a recap of what happened. Indonesia's fund management assets shrank more than 12% in 2022 as global central banks raised interest rates to rein in inflation, signaling the end of an era of cheap money and driving down stock and bond markets. According to data published on the website of the Financial Services Authority of Indonesia, the local fund management industry had 508.19 trillion rupiah of assets under management as of end 2022. A 12.37% decline from 579.93 trillion rupiah in 2021. As usual, the regulator didn't provide an analysis. Assets fell by double digits across the board. Stock fund assets dived 17.21% to 111.44 trillion rupiah. Conventional bond funds fell 10.98% to 140.03 trillion rupiah. And money market funds plunged 19.28% to 89.86 trillion rupiah. Sovereign investors and pension funds are expected to open more overseas offices in 2023, even as global growth prospects slow and the threat of inflation lingers. In 2022, sovereign wealth funds and public pension funds opened 10 offices overseas, 4 of which were in Asia. At least 2 Asian asset owners, Singapore's Temasek and Malaysia's Khazanah, plan to boost their presence outside of Asia. The desire to establish an overseas presence is expected to extend into 2023. The Employees Provident Fund in Sarawak will be supplied with 3 mobile trucks to implement outreach programs in the state this year. EPF Chairman Tan Sri Ahmad Badri Muhammad Zahir said the program would focus on rural areas. The use of mobile trucks in this program will enable the Sarawak EPF team to provide more extensive and better service to communities in rural areas and highly populated areas. Hong Kong's mandatory provident fund suffered its worst investment loss last year since the 2008 global financial crisis, but may see a double-digit rebound in 2023 amid signs that investor sentiment is recovering, according to local investment consulting firm GUM. The MPF's return on investments plunged 15% in 2022, much deeper than the 0.3% shrinkage in 2021, as global markets were battered by US rate hikes to rein in inflation, the war in Ukraine, and lengthy COVID-19 lockdowns in China, the firm says in a statement on January 10. The decline translates into an average loss of 38,228 Hong Kong dollars for each member of the MPF, Hong Kong's largest public retirement scheme with around 1.05 trillion Hong Kong dollars of assets and over 4.5 million members as of December 2022. But market sentiment has already turned around, GUM says. MPF began to bounce back since November after almost a year-long bear run. GUM expects the fund is likely to see a double-digit return in 2023. The Securities and Exchange Board of India has allowed asset management companies that have actively managed equity-linked savings schemes to launch a passive ELSS, but the AMCs can do so only after they close the existing active scheme. This comes at the beginning of the most critical quarter for ELSS schemes, which are used by investors to avail themselves of tax deductions. Passive schemes have been stealing a march over active schemes lately thanks to their relatively lower costs and better performance. This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.